Well, good morning, everyone. Welcome to Trading a Smaller Account. I am delighted to see so many of you here today on a day when we might just be tempted to go with the head in the sand approach. And, I was thinking this morning, Saturday, I took the day off and I didn't look at any news media. I looked at no social media. I just took a day completely off and it was lovely, I might add. But then on Sunday, I woke up and there was all kinds of stuff hitting the fan. As many of you know, I'm Canadian. A lot of my Canadian friends and family members were reaching out going like, what in the Sam Hill is going on? And how are these tariffs going to potentially impact our lives? A lot of people in the US asking the same thing. Before we get our knickers in a twist, as I like to say, and overreact, I want to talk a little bit about that today. And then I want to take a look at sectors that might not be impacted by things like tariffs. So things like perhaps the communication sector. So that is going to be our topic today. So how can we take advantage of sectors that might be less influenced by tariffs? So that's our topic. If you are not following me in the land of X, I consider this your formal invitation. My handle, Barb Armstrong CS. Mike Fairborn is with us in the chat. He's a friend and fellow coach and understands all the strategies we're going to talk about today inside and out. So if you have any questions, don't hesitate to ask, and follow Mike on X as well, Mike Fairborn CS. Also, if you are linking arms with us here for the first time, feel free to type a greeting into the chat so that we can welcome you. So yeah, love having you on board, always welcoming new people to this class. It's continued to grow over the last 4 or 5 years that we've been meeting together. And we used to meet together once a week for 45 minutes on a Friday before, just as the market was opening. Now we meet Mondays and Fridays at high noon Eastern. And we also meet on Wednesdays. I treat the trading price patterns as a companion class to this. So we now get to meet for this class 3 times a week. So I hope you'll join us for all three of those classes. So just to cover a few important bits of information before we kind of get into the thick of things, we do trade options in this class and know that options carry a high level of risk and aren't suitable for all investors. You have to meet certain requirements in order to trade options with Schwab, and not all will qualify. Know that we use the Paper Money software application on the Thinkorswim desktop platform. Looks like, smells like, feels like real money, and it is a great a place to learn, to become familiar with the trading platform, to make sure that you understand a trading strategy before you consider trading it in your personal live money account. Know that there are some nuances and differences. The most important one for us with respect to options is that it won't assign short positions early in Paper Money, and that can happen in a live account. So if you are new, first of all, welcome. But to know that we started with a $25,000 account at the beginning of the year. Our max position size, if we're buying stock, is 5,000, and our max risk per trade is 500. And we are focusing on short to intermediate term time frames, and we are looking to trade both bullishly and bearishly, depending on which way the market and or a particular stock is moving. Okay. Now, one of the things I wanted to mention today is that if you have never attended a live event, you might want to consider doing that. You can go to schwab.com/events or schwab.com coaching. And when you do that, I'm just going to bring this tab up. When you do that, if you come to coaching and then come to in-person events, you'll see we have an event coming up in Atlanta. The registration is full, but if you live in the Atlanta area and you'd like to join us, I'm sure we will find you a seat. And shh, don't tell anyone I said that, but Yeah, and I will be at the Atlanta event this weekend. So if you are coming, please come up and introduce yourself. I would love to get to meet you in person. Then at the beginning of March, we've got another technical analysis and options 2-day workshop in Scottsdale, and then an advanced options workshop. So if many of you feel like you're ready to get your blue belt or your brown belt or your black belt, this might be, a great place to start. And I'll be at that Chicago event also. We will have events coming up in the DC area. Okay. Yeah. So we'll be, all over the country now. I think DC is September, and I'm hoping that I get to go to that event, September 12th and 13th. We'll be in DC. We'll be in Chicago a couple of times throughout the year. We'll also be, in New York in June, and then again in August. There will be a market drive at the end of June, and then a 2-day workshop August 8th and 9th. So just scroll through and have a look. Okay. Now we do have a lot to cover, so let's get out and have a look at the markets. Okay. So let me bring up. And what we tend to do in this class is, on Friday, I pretty much skip the market overview because I know that many of you go to multiple classes every day. But today, given, breaking news that came out over the weekend, the markets had a pretty significant reaction to that. And, this is, so I'm thinking, like, do we take one hand and then the other hand and put them underneath our, behinds and sit on them for a day? And we're going to review fewer trades today for that reason, because you can see the market opened down. Okay, so it gapped down on the open. When I first looked at the market, it was down about 1 3/4%, and then it rallied pretty dramatically. And now it looks like it's starting to sell off again. So if we come to a 1 day, 1 minute, we see it gap down, fell, and then has rallied. And who knows where we'll be by the end of the day. And one of the things that can kind of, frost your petunias, so to speak, is that if you have a stop, you could end up triggered out and then the stock could rebound. And, we got stopped out of our long call position today on Citigroup. On C. And, we got stopped out at the beginning of the day, and now it's rallied. And it's now higher than where it closed on Friday. So wouldn't that just kind of frost your petunias? And sometimes this happens. But it's just part of trading with discipline. Okay. And so does this mean that this stock is dead to us? Not at all. But, when we look at the NASDAQ, same thing happened, gap down, continued to sell off, and then, is not back above where it opened, where it closed on Friday, but it has rallied and is now kind of going sideways. So if we come and we look at, let's go to a 1 year. Here's the 100-day moving average. It's still above that. So this is, it's still a strong uptrend. Today has just been a day. And again, gap down on the open, sold off even more, and then has rallied pretty significantly. So where it was down almost, 2% at one point, it's now down just less than 1%. Yeah. Yeah, somebody is saying, asked about having events in the DC area. I addressed that. I'm just looking at questions. Someone signed up for Dallas. Good for you. Like, I loved attending these as a client. And as many of you know, I started with this education journey on the other side of the camera, right, as a client, which is kind of interesting. And I've now spent, I joined in 2016, so it'll be 9 years in April that I've been now on this side of the camera. So it's been a lot of fun. Yeah. Okay, so I think I'm caught up on questions. But when we look at the NASDAQ, and if we extend this line, opened close to what I had drawn as a diagonal resistance line that it broke above, came back to retest, moved on to the upside, and looks like it's retesting again. Okay. Yeah, so somebody's asking about these arrows. So I'll talk about that in a few minutes, okay? And how about the Dow? Well, and this looks kind of like the least angsty of the lot, right? Like it's still healthily above the 100-day moving average. It's above the 30-day moving average. December was kind of a tough month. We had this diagonal resistance breakout, and it really hasn't looked back. So, it is still down like what, a third of a percent. And it too gapped down on the open, went way down. It was down about 1.5% or so, and has now rallied. And again, this is a live candle, so who knows where it will be by the end of the day. But the NASDAQ and the S&P both up over 20% in the last year. And this one, even though it's in third place, behind the NASDAQ and the S&P in the last year. Oh, sorry, I thought I had changed that for a sec. Show prices percentage. It is still up, almost 16% in the last 12 months. And then the Russell, bit of a pennant pattern continuing here. It too gapped down. Like, do you see a theme? And then has rallied. And so we're looking for it to break out above this kind of potential diagonal resistance line. And the VIX, any guesses? Yep, it's up. But again, it gapped up on the open. It's still up 12%. It's sitting at 18.5. But what this green candle means is it gapped up on the open and then has pulled back. Still above, where it closed on Friday. But it's given back a lot of that initial oomph. Like the high for today was 20.42, and it's now trading, $2 lower than that. Okay. Yep. Okay, so now if we come and we look at our sectors, and if you are new to this class and you're wondering about the charts and that kind of thing, there is a group of trade management mini sessions. So you're going to want to subscribe to the Trader Talks from Schwab coaching channel. And then when you come, just see, I'll bring up the Trader Talks. You can go in and there are a bunch of short videos on how to set up the, customize a watch list like I have, or how to customize various things. So today, which are the leading sectors? Well, healthcare is strong, consumer staples is strong, energy and communications. But in the last month, who's been leading the pack? Communications, financials, and healthcare. How about the last 3 months? Consumer discretionary, communications close to a new all-time high today. Financials, taking a bit of a hit, but, up 31% today. And this is looking similar to the major indices, right? Gap down and starting to rally. But, when you look at communications, and somebody said, why would communications not be as impacted by tariffs? And so let's go and look at that. So let's look at a stock like a Meta. Okay, so this is Facebook. Okay, and Instagram. And how many countries in the world do they participate in? Well, probably the majority of them. How about Netflix? And this stock is up today when all the major sectors are down. So, Meta is up 1.5%. Now, Netflix, oops, maybe it's my NFL. Maybe I'm thinking about the Super Bowl. coming up on Sunday. But you know, when we look at Netflix, it's up 0.5 point today. And if you come to the Analyze tab and you come down here, it's like, okay, I think most of us know what Netflix does, right? You know, they offer, you know, TV series, documentaries, feature films. They were incorporated in 1997. So they're not even 20 years old yet. Or sorry, they're not even 30 years old yet. And they're in 195 countries. So that begged the question, which came up from our guys behind the scenes, which I hadn't thought to ask that question. And we looked it up. There are only 5 countries in the world that they are not in Netflix. So they are not in China, Crimea, North Korea, Russia, and Syria. You know, and you know, it's just it's such a big market. I think they'd love to be in China, but that Netflix has cited challenging Chinese regulation as a reason for not entering that country. But they're in 190 out of 195 recognized countries in the world. And so how might, you know, tariffs impact that stock? Well, if tariffs drive up the value of the American dollar, then the currencies from the 189 countries that are not, you know, US dollar countries, you know, that translation back into US dollars might be a little less. And so that could potentially have a negative impact. But, you know, and you know, they recently raised their prices, but in all honesty, for some people, that extra, I don't know what it is a month, $1 or $2 a month, are they going to cancel that service? And so there might be some that do. And, you know, but the majority probably won't. You know, and I'm sure they've done a lot of study on what might or might not cause somebody to rethink their decision with respect to raising of rates. But, you know, we have a stock, just let's go back here for a sec to the 1 year. It's up 74%, almost 75% in the last 12 months. We saw it have this, you know, tough time in December, like so many other stocks did. And then it came up and hit a new all-time high back, you know, on the latest earnings announcement, and has been setting up a bit of a flag pattern. And so, you know, could we look at this and say, you know, could we do a long call vertical on this? You know, or could we do, so Kevin has been with Netflix from the time they sent, you know, DVDs in the mail. Yeah. Yep. So, but could we look at this if we're bullish on Netflix and say, you know, and when I first looked at this morning, you know, it was, okay, here's Netflix. Sorry, I also looked at Meta this morning, and we'll look at that one next. But could we come to the trade tab and say, okay, it's sitting at 900. Could we do an 895 and 900, or sorry, could we do a 975, like where it's conservative? If we came out this to February 21st, that's only 18 days. Could we do the 975 and the 980? Would we be able to get enough premium? Well, it's 268. And so we get our max gain if it's through if it's trading above 980 at expiration. And our max gain on this would be $232. Now, our example trading plan is that, you know, if we can get a 50% gain, we're going to call ourselves a happy campers. We don't have to get the max gain. And so this, and our break even on this, and this is a bullish trade, is $3 lower than where it's trading now. And so, you know, or close to $3 lower. So if we look at that and we say, well, okay, if we think this stock might hold this price, could we put in a target, say it's at 270? times 1.5, we'll put in a target of $4.05. And, you know, we're live in the market. So now it's gone down to 250. Interesting. So let's do 2 of these. We can risk up to $500. And create an opposite order. We're going to make this 405. Prices are all over the place. Good till canceled. Confirm and send. And we're going to put this in our long call vertical group. And then I'd like to compare this because this is only 18 days away. So this is a very short-term trade. And Roy asked the question, why not give it more time given the uncertainty? And I really like that question. And so I wanted to make that kind of our second topic of the day, which is how might we take advantage of this volatility in the market? So if we come out here, so that's our first trade. And then we're going to come out to March and say, what if we gave this 46 days and we looked at similar strikes? So we did the 975, 980, or, you know, if we were more bullish, we could do, you know, the 980, 985. See, here we'd have to pay, well, and again, like the numbers are kind of going all over the place. So let's say we're going to try and get filled at this 270. So 270 times 1.5. So we're going to put our target at 405. Oops. Don't want to block the view. Okay, confirm and send. So here we want to buy 2 verticals at 270. This is a long call vertical. So the goal is for this to continue to be above 280. And we're going to put this in our long call vertical group. And we're going to compare to the February 21st expiration. Now, sometimes people will look at this and they'll say, why don't you just pick the better one? And it's like, well, how do we know which one is the better one? And we're trying to figure this out together here. So here's kind of my thought on it. So if we are right, and we're trying hard to be right, correct? Like if we are right and this stays above 280, in fact, it's now at 282, 281, you know, this will reach the 50% gain that we're looking for faster because it's approaching expiration faster. But if it pulls back between now and the 21st, we have less time to recover because this option expires February 21st, 18 days from now. That's what the 18 means. And where, you know, we have a little more latitude, if it pulls back, there's more time for it to recover. Now, that's the advantage of the March 21st. The disadvantage is that it could take longer to get up to the target that we are seeking, which is the 50% gain. Okay. Now, with Trader Talks, and let me just bring this over. If you are new and you haven't seen the example trading plan, and this is just a framework. So if you come to Trader Talks and you've subscribed in the bottom right corner, when you come here, it will show you whatever is currently, you know, being done live or what's coming up next. But if you come to playlists and then you're going to look for a pink thumbnail, it's trade management mini sessions. And when you come to the full playlist, you'll see these example trading plans. And here is one for long call verticals. And this is not the IT of trading plans. It's just a framework from which you can then create your own trading plan. But if you're starting in paper money, you might want to follow this one and then say, oh, I'd like to tweak it this way or that way. Now, Nick is saying no stop. Why no stop? Well, the reason we don't put a stop on this when we enter the trade is that sometimes when the market first opens, take this morning, for example, there can be a lot of volatility. And even though, our goal is we get out if it's up 50% or down 50%, we don't put in an OCO order because sometimes we could end up stopped out for, I've seen this in my own live account, for far more than that 50% loss. And then the market settles down and we wouldn't have been stopped out at all. If I get, if I end up nicked out for a 50% gain, I'm willing to fall on that grenade, but I don't want to, take the loss unnecessarily. So we just monitor these on a daily basis. Okay, so we just look at our long call vertical group, goes anything up close to 50% or down close to 50%, and then we monitor accordingly. Okay. Yeah. So that's that. And then, when I talked about earlier, like how to adjust customized charts, there's a 10-minute video on that, or how to customize the monitor tab or watch list. Those are all down here. These are the turquoise ones, the ones that are thinkorswim oriented. Okay. So that's 2 example trades on Netflix, and we'll compare those going forward. Okay. Somebody's saying it doesn't look like it will fill. Now, sometimes we can end up with what we call a paper money fill. And so this one did fill at 250. I think we had 270 put in there. So we got a better fill than we were asking for. Yeah. And this other one we got in, the one that expires in 3 weeks, in 18 days, 280, for the same strikes. We paid more for the one that's expiring closer. Okay, so that's Netflix. Let's go and look at Meta now. Now, one of the things, and you may say, why are we doing long call verticals? Because if we look, Netflix is now close to $1,000 a share. It's $982. So if we came to the trade tab, could we buy shares of stock? We could. So we could buy 5 shares of stock, but that's all we could be assigned. That's all we could afford to buy. But we could do that, and we have almost 9,000 in the account. So there is money. But if we wanted to buy an option, that's really out of our snack bracket, because we don't want to risk more than $500 on any one trade. So if we came out to March, we'd have to go way, 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 way out of the money. Let's see. Because if you buy a call, how much could you lose? You could lose all of it. We'd have to come out to the 1,040. And does this mean it's not worth trading? Well, we could do that. But by doing a vertical where we funded the purchase of the option with the sale of an option a little above it, we're capping how much we can make, but it makes it tradable in a smaller account. Okay. So somebody's asking me to talk about assignment. We'll place one more trade. We'll do something on Meta, and then I'll talk about assignment. Okay. Okay. So let's look at Meta. And again, this is another company. It's offering a service. There isn't a physical transfer of goods back and forth across borders. What there is, though, is that transfer of currencies if you're a large multinational company, which Meta certainly is. But, we've seen, this even in December, this had a little bit of a pullback in December, created a bit of a pennant pattern, but largely pretty bullish, right? And if we look at the last year, just to put it in perspective, and I come back to show prices percentage, this is up over 50%. So beating the returns on the S&P and the NASDAQ. And then if you look at live news, they recently had earnings. So, and beat handily on earnings. So, are analysts raising or lowering price targets? If you're just looking for a feel for what the analysts think, well, Fubon Securities raised their price target to 810. So the recent, like the all-time high is 710. BNB raised their price target to 505. Like, to me, it's fascinating. There's a $300 difference in that price target. So somebody is not going to be right here. And so you can scroll through and look and just see, what other analysts are saying. But the two that we saw at first glance were raising price targets. And so they seem to be somewhat bullish on this. And then we saw, on the earnings, that the market had a positive response also. And so let me just change this back. And then today, in spite of everything else gapping down into the red, we've got, the last, 15 candles? Like if we look here, the last bearish candle we had was back on January 14th. It's like bullish. And so might you say, well, have we missed our chance? Yeah. Have we missed our chance? Well, sometimes an object in motion can continue in motion. And could we trade this conservatively? And could this be an opportunity? It's now at almost 700. Like, I don't know if we could come back here to 675 and be able to sell a short put vertical. This stock is up over $9 today. But let's come out to the trade tab. And we don't need 50 strikes. Let's go back to 10. So if we came out 25 days from now, do we have enough volume to be able to trade this? We do. Is there a tight enough bid-ask spread? We want it to be less than 10%. It's 25 cents on a $12 option. So is that lower than $1.27? Yes. So could we sell? Did we want it to be the 675? And with a short put vertical, we want it to stay above 675. So, and it's saying there's a 34% chance that this could be at or below 675 come expiration, which means we have a 65% chance according to this current number, and it's a fluid number. It'll change all day long. But we get paid $1.55. And so if you say, okay, if I could make $1.55 on this, how much am I risking? Well, I'm risking $3.45, so $5 less that. So $3.45. So that's a potential return of 45% for a trade we'd be in for 25 days. Our rule of thumb is that we'd want, at least a 25% return. Now, some might say, why not do the February 21st expiration? And we could. And again, time decay is going to work in our favor faster. We might not get as much premium because we are only 2 weeks out, but we could check and see. Now, if we come out to March, time decay is going to take longer to kick in. But we could do that, just if we're comparing time frames, that might be a worthy exercise. So here we're risking $350. Our max risk per trade is 500. So how many of these could we do? We could do one. So we're going to put this in. We're going to say, hey, when we've got 80% of our max gain, now can we change our minds? Let's say we have 75% and it looks like Meta might be starting to pull back. Could we go in and say, like, I'm willing to pay 35 cents to get out instead? So this would be 80% of our max gain at about 30 cents. Good till canceled. And we're going to compare this to a March expiration. And that's another thing I'll sometimes put in the trade management mini sessions is this comparison analysis. And then sometimes we do discuss this in class, but if I've done a mini session on that topic, that'll be in the middle section, in that kind of tangerine color. And then I'll let you know about it in this class. I also will post it on X. So let's come down now to this 675 strike. So same strike that we put in up here, and we'll go out to March. And again, do we have enough contracts? Yep, there's almost 600. Do we have a tight bid-ask spread? Yep, 30 cents. So if we go to 675, we'll get $1.75. That's not that much more. So somebody's saying their screen is blurry, please hit refresh or log out and log in again, because it shouldn't be blurry. Okay, so $1.77, and it's going to take a lot longer for that time decay to kick in. But we're doing a comparison. We got paid $1.50 for something expiring in 3 weeks. Okay, so that's not a lot extra, but you know what? We're going to do this comparison regardless. Single order, first trigger sequence, right click, create opposite order. We're going to say, hey, when this is worth about 35 cents, we'd like to buy it back. And if we're doing that same analysis, it's now 175 divided by 325. And our, you know, we want a higher return. We want at least 46%. Well, that's wrong. 175 divided by 325. It's got to be 50%, 54%. So it meets our requirements. So we're going to make this good till canceled. And we're going to compare this. It's in our short put vertical bucket to the February expiration. So I do not have time, you know, well, actually I do. I have a few minutes. We've got, you know, about 8 minutes left. So I want to talk about what happens if something is in between the strikes. And so let's come and look at TTD, the trade desk. So we have a short put vertical on the trade desk at 120 and 118. So I'm going to put 118 on here. And it expires this Friday. And so if this were Friday at expiration and we did not close this out, what would happen? What would happen is the 120 strike that we have sold. So we have sold this strike, this 120. And when I sell a put, what am I saying? Well, when I sell a put, I'm saying, hey, if you would like me to buy 100 shares of this stock, let me just get that off the screen. If you would like me to buy 100 shares, I'm happy to buy 100 shares at 120. Well, that's 12,000. We don't have 12,000 even available in the account. Okay. But that would be assigned to us. And if we had 2 or 3 contracts, we'd be assigned, you know, 12,000 contracts times 3, maybe 36,000, maybe more than the value of this account. So that is not a happy circumstance. So then you're going to have somebody knocking on your door, giving you a little ring-a-ding-ding saying, excuse me, Barb, you've just bought $36,000 worth of stock. You're a wee bit short. So we need you to put more money in the account. Now, what happens to this strike, this one that you bought, and what does it mean when I buy a put? Well, when I buy a put, it gives me the right to sell the stock at 118. But if this is at expiration, that's going to expire worthless. Okay. Now, if it happens right after, you realize this right after the bell rings and the market closes, you can call your broker and say, hey, I want to sell this position. Otherwise, the next trading day, you now own a bunch of stock that you can't afford to own, perhaps, and you're going to have to sell it. And if it tanks over the weekend, like this thing did this morning, that could be kind of ugly. And so now you're at risk of losing more potentially than what your theoretical max risk is. And so this is why, if you look at our example trading plan, one of the rules we have in it is that we never allow this to go to expiration. We always close it out beforehand. Now, if it closes, if this was a red candle and it was at expiration and it closed below both strikes, then you'd have your max loss. Like if it in fact closed below both strikes, you'd have your max loss. Now we actually have this position on in our account. So it opened lower and has rallied, and we have until Friday. So on Wednesday, we're going to look at this again. And it could well, move back up above, and it might not. And if it hasn't, we'll close it out on Wednesday. Okay. But we're going to give it a chance to rally. Now, it's in between the strikes. Do you think we're at our max loss? Let's go see. So TTD, we're down $141. We have 3 contracts, and if you see a little in the money sign, it means it's expiring this Friday. It could be in the money and we don't get this symbol until it's the week of expiration. And so it's trading in between the strikes. Do we have our max loss? No, our max loss would be at $2. And so we're not at that, we're at $1. So we're only a third of the way to our max loss, even though it's in the money. But because we're in the week of expiration, in paper money, it will never be assigned early. In a live account, it could be assigned at any time. So if it is assigned to you, you now own stock you don't want, you could just turn around and sell it immediately, and you're going to be down 46 cents a share times 3, or this $140, but you're going to be $1 a contract or $300 still away from your max loss. So it's a flesh wound, but you haven't blown up your account. Does that make sense? Okay, I hope so. All righty, guys. Well, believe it or not, our 45 minutes has come and gone. I don't think there's a survey today, but when there is a survey, one of the questions that I'm often asked is, can you review the trades we did? So we did trades on Netflix. We did a long call vertical that expires on February 21st, 18 days away. And we did another one that expires in March, a long call vertical, and we're going to compare and contrast those. And then we did short put verticals, one a weekly option that expires February 28th, and the other a monthly option expiring February 21st. These are short put verticals, and those will expire. We'll compare and contrast those as well. So short put verticals, long call verticals, comparing timeframes, talking about how to potentially profit from the mayhem that the market can sometimes throw at us. Just a couple of other stocks you might want to look at. And tomorrow I teach Getting Started with Technical Analysis. If you haven't checked that out, I encourage you to join us. So here's T-Mobile, seems totally unfazed by all the shenanigans happening in the market. Tomorrow we may talk candlesticks, and if so, I may well use T-Mobile as an example. Could we look at, another financial company? Again, financials, are we carrying things across a border? Typically not. Okay, so those are just some ideas if you want to do some additional practice in your paper money account. And here's my ask as we wrap things up. If you have not hit the like button, if you could hit the like button, it lets me know that you found the content valuable, but more importantly, it helps move this up in the YouTube algorithms so more people can find this content. Secondly, if you could subscribe to the channel, there's a little button down there. It's free. It won't hurt. And you'll be so glad you found it. I had somebody once say they had watched one of my webcasts and loved it, but couldn't remember my name. And it took them 3 months to find it again, find our webcast. So if you hit subscribe, you won't put yourself through that, angst, shall we say. And then follow us on X, Barb Armstrong CS, Mike Fairborn CS. Up next is the fantastic James Boyd talking about, I think it's trading with technical indicators, but whatever he's talking about, you'll want to be checking it out. So stay tuned for that. Huge thanks to Mike Fairborn and to the guys behind the scenes, not only for bringing such great production value, but for giving me some great ideas to share with you in our trading session today. Thanks, everyone. Have an awesome day. We'll see you soon.